There's a couple different ways to use them. A lot of traders use them to try and trade in between, buy when it hits the lower band, sell when it hits the higher band. That's one way to use them. Another way
Welcome back, traders and investors. We have Russell Rhoads on the line. He's a senior instructor with the Options Institute at the Chicago Board of Options Exchange. He is also a chartered financial analyst and joined the Institute in 2008 after a career as an investment analyst and trader. How you doing this morning, Russell?
Doing really good. Playing a little catch up, but I'm doing really well.
Okay, so discuss your role at the Options Institute as a senior instructor.
Sure, I'm one of 4 instructors that we have here, and we talk to groups that range anywhere from grade school kids to high-end professionals like a trust fund, or I should say state fund managers and that sort of thing. That's what my month looks like this week. I say playing catch up because I was on the road speaking to a couple of CFA groups last week, and didn't get to watch the markets as closely as I like to last Thursday and Friday, and I know I missed a lot of action.
Okay, so what does the CBOE offer as far as like classes? Like, let's say I wanted to take some classes. You just go to the CBOE site. Is it something that it's offered weekly, monthly? Is there stuff that can be done online?
There's all of that kind of stuff. Every week or two, we do at least one webcast based on what's going on in the markets. Right now, I've got, I think, 4 scheduled between now and the holidays. We also have just about every type of free tutorial that you can think of available on the education part of CBOE.com. And we also have on-site classes. We have on-site classes for anything from beginners to institutional investors. So there's something for everybody. But it's just as far as the free stuff goes, and coming from somebody that actually makes money if somebody buys their book, when people ask me, what's a good book to get started with, I say don't buy a book, don't spend any money yet, and go to the CBOE's website and use the free education.
Okay, free is what it's all about, Russell. That's
Yeah.
Excellent. So what about the new products at the exchange? I know you guys are looking at a shorter-term volatility product. How's that going?
We've got a 9-day version of VIX, which is called marketing spent a lot of time and came up with CBOE Short-Term Volatility Index. And we started quoting that just under a year ago. We've started trading futures that expire every week on VXST, and we also have options that expire every week. Now, when I say every week, I mean every Wednesday, because volatility products tend to expire on Wednesday mornings instead of Friday mornings.
How come?
Well, because with respect to the VIX, VIX is settled based on VIX measures a 30-day market volatility outlook, and it is settled based on a 30-day outlook as well. So the settlement value for VIX is determined by options that expire 30 days in the future, one series of options that expire 30 days in the future. And if you add 30 days to a Wednesday, you get a Friday. So VIX expires based on a 30-day outlook, backtracking 30 days from the next month's third Friday. VXST settles based on weeklies, and VXST is a 9-day measure of implied volatility. If you add 9 days to a Wednesday, you get the following Friday, which would be the Friday weekly expiration. So that's why volatility products normally settle on a Wednesday morning. Now, if a holiday gets in there, it can muck things up a little bit. But a good rule of thumb is every Wednesday, and sometimes it's the same Wednesday as the third Friday week, and sometimes it's the Wednesday after. And in fact, for October, it's not this week; it's next week. This is the third Friday week, so it's actually next week.
No, I'm not sure if it was you or Marty that has the office open, overlooking the floor with like the window that you could. Is that you or is that?
That would be me.
That would be you. Okay.
Yeah.
Good. A good memory on my part. So, what's the mood in the pit there? I mean, boy, some crazy action last week, volatility. Is the volume ramped up with this move, or what's the feeling on the
volume
floor?
definitely ramped up. I believe on Friday we had our second busiest ever day for the CBOE Futures Exchange, which is where VIX futures trade. And I know that I'm fairly certain that the VIX option volume was well over 1 million contracts on Friday, which is also, we've done a few dozen million-plus contract days, but that's still kind of a, let's say in the top 90% of volume days for VIX options. I was in the office. I was in Chicago Monday through Wednesday and teaching a very large group from China in a classroom that overlooks the pit, and it got very distracting even earlier last week with all the noise that was coming out of the pit. I actually had a couple of students get up and walk to the window to try and see what was going on.
Do you have an interpreter to do that, or do you know Chinese?
I do not know Chinese. I laugh because the Rosetta Stone commercials that say you can learn a language, that's not true of everybody. That's just something I'd never be able to do. We speak through an interpreter. We have a gentleman named Eugene Xing who is an employee of the exchange and is over in China, I think almost once a month now, discussing options with the three exchanges that are planning on launching option trading in China in the near future. They don't have listed option trading as of yet, but they're close.
Really? So wow,
Yeah.
wow, and so that'll definitely be another boon to the options markets. OEX, how's the OEX doing? I know I used to trade those. I know that spider calls and calls on the S&P futures are very popular. How's the OEX contract?
The OEX volume is it's let's put it this way. In the index, when you divide up the percent volume in index options and you include VIX in index options, that's how the OIC keeps up with the volume. SPX and VIX are 95% or 90 to 95% of index option volume every day. The Russell 2000 comes in third, and that's probably seeing the biggest growth this year percentage-wise. OEX is usually a pretty distant fourth. It's kind of faded away, and in fact, what's interesting about OEX, which used to be the big dog, the VIX pit is what used to be the OEX pit. They moved the VIX guys into that spot, and now OEX is actually traded at a post with just a couple of guys.
Okay, so we had this extended period of low volatility, and now it it really ramps up. And I know people would get anxious when the volatility ramps up. Do you think that just your general feeling for implications in the market, the overall direction of the market? Are people really paying up for insurance now, or is it still just a complacent buy the dip attitude?
Well, Friday we actually got the 7th biggest percent jump in VIX in a single day ever, or I'd say ever since 1990. We do have some VIX numbers going back to the late 80s, but since that was actually the 7th biggest on a percentage basis jump was on Friday. And I think which is unusual. You would think all of those big jumps would have been back in the 2008-2009 period. Part of the reason we had the big percent jump was we were coming off of a fairly low base, but the other part of it is I think there had been so much, everybody was almost conditioned to buy dips and not worry too much when we got that first move lower in the S&P 500. And at our risk management conference back in the spring, the one in the United States, somebody asked there was a panel discussion, and one of the questions was, what's it going to take to get VIX back up to, above historic averages? And I thought the smartest answer at the time was it's going to take almost like a double move to the downside, or a volatility event where we don't get a rebound back to the upside. And it feels like that's what we got last week. And there was too much complacency, and there was the easy trade was buying on the dips. And when that becomes the easy trade, it probably should be kind of a scary trade too.
Okay, and before we let you go, just put call ratios. I know that they get to extreme levels. Have you seen any extreme readings on the put call ratios over the last week?
You know what was interesting is I was actually on Friday when stuff was going on. I was actually speaking to a CFA group, and part of my my presentation was about VIX. But one of the things that I would discuss was the put-call ratio on the SPX, and I would just show how we just about always trade more puts than calls, and that's why downside moves have the upside influence on VIX. But you know, I wasn't looking at market data or anything, and I said I would not be surprised if the put-call ratio got up to around 3 or so, which was the high in 2014. And I was actually surprised that it was closer to, I believe, around 2.4 on the close on Friday. Whereas back in January, when Vladimir Putin started saber rattling or whatever it is he would rattle and looking at the Ukraine, we got a put-call ratio well over 3 for a couple of days. So I did find it interesting that it wasn't at an extreme on Friday. It was high, but not at an extreme.
Okay, that's interesting. So we'll wait for those extreme levels.
Yeah.
Just to close out the segment here, any final tips for investors that want to learn more about options?
Oh, well, if you want to learn more about options, I hate being self-promotional, but
that's okay.
Really, the CBOE's website is by far one of the best places to start in the Learn Center because it is free. Keep an eye out in the near future. We're going to have an app where you can actually learn from the very beginning on your iPhone or your iPad while you're riding the train or commuting via plane or just killing time at home. I just got it on my phone today, and I have the beta version, which means we are real close to releasing it to the general public. But I think it's 20 short lessons with a Q&A at the end. And again, I think that's more useful than going out and spending $50 on a book to get started. So keep an eye out for the app as well.
And if you were to go buy a book, what book would you recommend?
Oh my goodness gracious. That's always kind of a tough one. Now I just flipped around and I'm looking at my bookshelf. If you just want to get a feel for strategies, there's a book called The Options Playbook by Brian Overby, who, I get nothing for recommending the book, but it's often, and in fact, it's similar to a book that I wrote, but I think his does a better job for beginners. But the Option Playbook's really good. It gives you a two-page layout and explains why you would use a variety of different strategies and what they look like. So that might be a good one.
All right, didn't mean to throw you a curveball there, but
that's okay. No, I got it.
Russell Rhoads, Senior Instructor with the Options Institute at the Chicago Board of Options. Check out the site. Maybe you can sign up for a class that Russell's actually teaching here in the not-so-distant future and learn about the options market. Russell, thanks for coming on. Hope to have you on again soon.
I appreciate it. Thanks a lot.